Good afternoon, everyone. And I, Manisha, Deputy Director of FIEO, welcome everyone to this session. Federation, as you must be aware, is tirelessly working to make our exporter grow, the backing of which is knowledge. Among the various sessions organized by us on areas like logistics, market access, standards and compliance, and in our continued efforts to educate the exporting community on different aspects involved in international trade, today's session is aimed at educating the payment terms involved in international business. Now, as we know that international trade involves adhering to the regulations and inspection processes of both exporting and importing countries, and keeping in view the dynamics involved, as in the past we have seen, we have gone through various conflicts like Red Sea, Israel, Hamas, that we have seen in the past. It is essential to select a mutually agreeable payment method that minimizes risk so as to ensure secure and reliable transactions. To throw more light on the subject, I would like to welcome the speaker of the session today. I welcome Mr. Isaac Tudu. Let me just introduce his profile to the participants. Mr. Isaac is a banking professional with extensive experience in trade finance, amongst others, and the experience is over 25 years, and experience is with the two largest financial institutions in India, SBI over 15 years and ICICI Bank for over 10 years. Mr. Isaac is an ICC certified trainer of Incoterms 2020 in India. Mr. Isaac is also well-versed with ICC rules relative to trade finance and has in-depth knowledge of regulatory directions impacting trade finance transactions. Further, I welcome the participants who have joined the session and wishing you all a great learning experience. Now, I would like to leave the floor for Mr. Tudu. Sir, over to you for your presentation, followed by the address. Thank you, sir.
Yeah, I welcome all the participants on this wonderful session we are going to have on terms of payment. First of all, I would like to thank FIEO for giving this opportunity. So what I'm going to do, already brief about me have already been shared to all of you. I will start the presentation. So I'm sharing my screen with all of you. We will run through the screen. Okay, so here we go. I believe my screen is visible to all.
Yes, sir, it is visible. Yeah.
Yeah. So let us have a session on terms of payment in international trade. So what are the topics we are going to cover today? I will just give you a brief of that. We will cover the advance payment, chart flow of advance payment. Then we will cover documentary credit, letters of credit, LC. Within that, we will cover lot many things. Chart flow of documentary credit, LC. LC benefit for exporter, seller. LC benefits for the importer, buyer. LC risk to the exporter, seller. LC risk to the importer, buyer. LC precaution to be taken by the beneficiary of the LC means exporter, seller. Then we will cover documentary collection. Within that, we will cover chart flow of documentary collection. What are the advantages of documentary collection, disadvantages of documentary collection, and actions point for the exporter when payment is not made on due date by the importer or buyer. And in last, we will cover open account basis, chart flow of open account. So this is the flow of today's entire presentation. So I believe since I believe that all of you are, most of you are basically exporter, or maybe you all are basically eyeing to do the export. So if you are an exporter, what exactly you will do? How you will start your business? You will try first to find and negotiate with the overseas buyer for export of goods. When you do that, it is important not to lose potential business to competitors by overlooking different type of payment terms, which we are going to discuss, which could be attractive to your international buyer. So explore several payment methods and find the one best suited to your needs, means your need as an exporter and the need of the buyer. To succeed in today's global marketplace and win sales against foreign competitors, you, exporter, must offer their customers attractive sales terms supported by the appropriate payment methods. That is a reality, because getting paid in full and on in time is the ultimate goal for all the export sale. And an appropriate payment method must be chosen carefully to minimize the payment risk while also accommodating the needs of the importer. So always there will be conflict of interest between importer and exporter. So you will try to protect your risk and importer will try to protect his own risk. So in trade transaction, especially cross-border export-import, payments need to be made in a secure and timely manner. So when you are establishing a new relationship, buyers and sellers tend to use intermediaries. Usually they will approach the bank to facilitate the transaction. And as and when trust develops, then you may go for other type of transactions. So today we are going to discuss all these aspects while covering all the topics. So one of the key decisions is to be made when exporter and importer negotiate a sales contract is the selection of payment terms. So basically, in sales contract, seller would agree to ship the goods as per the requirement of the buyer, and buyer will agree to make the payment to the seller. But how buyer will make the payment, that need to be decided by the seller. So you can say that seller would definitely like to protect his part. He would like to have first thing that, okay, fine, you give me the advance payment, then only I will ship the goods, right? So that way there will be no risk for the seller. But whether that is possible in reality, let us understand that. Okay, so basically we will understand each and everything. The selection of which payment term is used will largely depend on a number of issues, including the critical one, what is the relationship between the importer and exporter? So if importer and exporter both have got good dealing relationship, maybe 5 years, 6 years, they are already dealing with each other. They know each other very well. There is a trust. Then nature would be different than the advance payment. Advance payment would come into the picture when maybe that buyer is a new one for the seller. Seller would try to ship the goods only he is assured about his payment. Not only assured, he has received the payment. So relationship is important. If it is a new relationship, maybe exporter would say that, boss, send me the advance, then only I will ship the goods. But there is a risk for the importer. Importer is also new. Exporter is new for the importer. Maybe importer will hesitate to make the advance payment. What if importer remits the fund in advance and does not receive the goods? So relationship, what is the relationship? What is the, you can say, conduct between both of them? If it is a new or it has got a past history, that will decide basically which payment terms will be used in the sales contract. Another thing is that availability of working capital facility to importer and exporter. So maybe exporter seller will say that, boss, I will ship the goods only when I receive the LC. I need export LC before I do the shipment. But the challenge is whether that importer has got the working capital facility with his bank or not. So for LC, importer need to have LC limit with its bank, isn't it? So if importer does not have any working capital facility with its bank, then even if seller wants to get the LC, maybe importer will not be able to provide LC facility. So what is the availability of working capital facilities to both? That will also decide which payment terms will be agreed in the sales contract and countries involved in the transaction. So this is also a very critical point for exporter, because not only the importer, exporter also takes a risk on the importer's country. Where exactly that importer is located? What is the country risk? Whether there is a political disturbance, whether there is a financial challenge, whether it is facing foreign exchange issue, or whether economic issues are there for that country or not. So country specific risk would be there. Maybe that importer is based in Europe, so you will not have any country risk. You may go ahead, at least you are sure that at least that country will not have any challenge. For example, some where the risk is there, where political issue is there, where foreign exchange challenges are there, maybe you will want to protect your part first. So broadly, These are the things based on that seller and buyer, exporter and importer will do or will decide which payment term is good for both of them. With this background, let us understand the first one, that is advance payment. So with this chart, I will show you, I will try to explain what is good for whom. So in case of advance payment, you can see here, seller would definitely like to have the advance payment, then only would try to ship the goods, give me the 100% advance. So in that case, seller will have no risk at all because payment has already been received, then only seller will ship the goods. But that is the very highest risk for the buyer. Why? Because buyer is not sure whether after making the 100% advance, whether seller will ship the goods or not. So this payment terms, advance payment, is highest risk for the buyer, and hardly any risk would be there for the seller as far as advance payment is concerned. So maybe buyer is not agreed to make the advance payment. So seller may go. What will be the best next course of action for the seller in this case? When advance payment is not agreed by the buyer, then seller may go for the documentary credit, means letters of credit, LC, we know it. So when LC has been decided as one of the payment terms, seller is assured. What is the assurance? Seller is assured that buyer's default risk is no more there. Because LC is issued by issuing bank to the seller, and they give undertaking that is irrevocable, means once undertaking is given, it cannot be amended, it cannot be cancelled without the consent of the seller, right? So issuing bank in this case gives undertaking to the seller. Seller will become beneficiary of the LC, where issuing bank agrees to make the payment to the seller, but there is a condition that seller should present documents which are complying one. But there is a challenge in this also. Maybe buyer does not have any working capital facility. So buyer may say that I want to give, but I do not have any limit with the bank. So what seller will do? What next best course of action is available to the seller? Seller may go for documentary collection basis. So within that also, maybe it is a DP basis, means documents against payment. In this case, seller will ship the goods to the buyer, and seller will present the documents through banking channel. Seller will submit all the documents, invoice, packing list, bill of lading, every documents to its own bank, seller's bank. And seller bank will forward the documents to the buyer bank, and buyer bank will approach the buyer that documents have been received, please pay and take the documents. So if buyer makes the payment, seller will receive the payment, and buyer will take the documents, and with those documents, buyer will be able to get the delivery of the goods from the carrier. So within documentary collection, obviously DP basis we discussed, DA basis, documents against payment, documents against acceptance, means usance. Maybe buyer is saying that, boss, I want to purchase from you, but I do not have right now amount to pay you. So why don't you give me credit? 90 days credit you give me. I will make you the payment from the 90 days from the maybe bill of lading. And if seller agrees to that, then in that case, same process, goods will be shipped and documents will be forwarded through the bank, and it will be received by the buyer's bank. Buyer bank will say to the buyer, you accept the draft, which is a usance draft 90 days from bill of lading, and take the documents. So what buyer need to do? Buyer will simply accept the draft, means bill of exchange, and take the documents, and based on the document, buyer will be able to get the delivery of the goods from the carrier. And on due date, after 90 days from bill of lading, if buyer makes the payment, then seller will receive the payment. Now, if they have got very good relationship, maybe they can go for open account basis also. In this case, seller not only ship the goods to the buyer, but also forward the documents directly to the buyer. So buyer has received the document. Based on the document, buyer will get the delivery of the goods. In fact, buyer will be able to use the goods also without making the payment. And when buyer will make the payment as per the sales contract, maybe both have decided that you ship the goods, seller will ship the goods during the month, and payment will be made in the next following month's first week. So next following first week, buyer will approach his bank and say that these are the payment need to be remitted to the seller, and seller will get the payment. So this is brief about whatever we are going to discuss. So let us understand one by one. We will go ahead and understand. So quickly we can see here, these are the 4 payment terms which are going to discuss today. Okay. We will learn in detail advance payment, documentary credit LC, then documentary collection and open account. So we'll start with the very first one, that is advance payment. Let us understand this. What exactly happens in case of advance payment? So in advance payment terms, the buyer pays the in advance. Simple. Once the seller is in receipt of the funds, entire amount has been received by the seller. Seller ship the goods. So payment is done by the importer to the exporter before shipment. A cash advance requires the importer buyer to make the exporter before the goods have been shipped, placing all risk on the buyer. That's why it is the highest risk for the buyer. So for exporter, it is most safest because money has already been received and then only goods need to be shipped. So basically, advance payment eliminates all risk associated with non-payment. So seller has received the fund, no risk related to that. For a seller, a cash advance is the least risky payment method. It provides a seller with upfront working capital to produce and ship the goods as well as security, since there is no risk of late or non-payment. So this is very good for the seller, but the challenge is whether seller will be able to get advance payment. You as an exporter will be able to negotiate with your buyer to make the advance payment or not. That is a challenge, right? As far as the importer is concerned, most riskier from the importer's point of view, as it will be dependent on the exporter shipping the correct goods in accordance with the contract, and advance payment increases the buyer's financial risk exposure to the seller. Entire amount has been paid to the seller. Now, importer need to depend on the integrity of the seller and would expect that seller will ship the goods as per the sales contract. So highest risk. What if tomorrow seller does not ship the goods? Biggest risk. In addition, payment in advance can create cash flow problem for the importer, as buyer has to wait to receive the goods. This method can be problematic if the delivered goods are not up to standard, faulty, or in worst case scenario, not delivered on time. Foreign buyers are also concerned that the goods may not be sent if payment is made in advance. So very challenging for the exporter whether exporter will be able to get advance payment as one of the payment terms. Definitely seller will try to negotiate. No, you send me the advance, 100% advance. That is the safest for the seller. But maybe that is not possible in reality, because ultimately you need to do the export. You need to also take care of the importer's need also, importer's requirement also. Thus, exporters who insist on advance payment as their sole manner of doing business may lose to competitors who offer more attractive payment terms. So if you continue to ask that, no, you need to send the advance payment, then maybe that buyer may go to the other seller. That is a challenge. Cash advance are common with low value orders, such as when purchasing from online retailers. Okay, when amount is slightly bigger, then very challenging to get advance payment as one of the payment terms. So for example, seller is not able to get advance payment, then what seller should do? What is the best next course of action for the seller? So here is the diagram chart. You can understand here for advance payment. Here is the seller, here is the buyer. They will have the sales contract. And in that sales contract, advance payment will be the terms of payment. So if that is the case, then what buyer will do? Buyer will approach his bank for remittance of entire amount. So once buyer bank receives the request from the buyer, importer, what this bank will do, buyer bank will simply remit the fund to the seller's bank. And seller bank, when receives the fund, ultimately, it will be credited to the seller's account. Very simple transaction. And once payment has been received by the seller, now exporter will ship the goods. So there is no risk for the exporter in this case, but highest risk for the buyer. Therefore, maybe as an exporter, you will have challenge to get payment terms as advance payment. If you are not able to get the advance payment, then you can go for next payment terms, that is documentary credit, letters of credit, LC we call it. You can ask LC should be the terms of payment in sales contract. Fine. So what is LC? LC is an irrevocable undertaking given by the issuing bank to the beneficiary, who will be the beneficiary seller, to honor a compliant presentation. So basically, these all words are very technical type of thing. In simple manner, when issuing bank issue LC in favor of the seller, means that bank is giving undertaking to the seller that we will make you the payment if you present the documents as per LC terms and conditions. Simple. So what exactly seller need to do in this case? He has to ensure that not only seller ships the goods, but he should be able to present the document as per LC terms and condition to get the payment from the issuing bank. The beauty of LC is seller need not be dependent on the importer's creditworthiness, because importer is not a party to LC. LC has been issued by whom? Issuing bank. Given to whom? Seller. So it is between issuing bank and seller. Seller will be the beneficiary of the LC. So issuing bank has given a conditional undertaking to the seller. What is that condition? Condition is seller should present documents which are complying according to the terms and condition of the LC. Then issuing bank will make the payment to the seller. So seller is least bothered about the buyer's position, financial position, because now you can say one sort of guarantee has been given by the issuing bank to the seller. So in other words, LC is basically an undertaking given by the buyer's bank to the seller that if seller submits the required documents accordance with the terms and condition of the LC, accordance with the UCP 600 rules and accordance with the international standard banking practice, seller will receive the payment from the issuing bank. Issuing bank is not going to see whether there is sufficient balance available in the buyer's account or not. Even if there is no balance available in the buyer's account, issuing bank will remit the fund. So issuing banks, this undertaking is irrespective of whether importer has sufficient fund in the account or not. Therefore, this payment term is very good for the seller because LC mitigates the buyer's default risk. But the challenge is seller need to ensure that he should be able to submit the documents as per LC terms and conditions. That is the critical thing for the seller in this case. As an exporter, you need to understand that LC is good, but it is a conditional undertaking. Where what is that condition? Condition is that as a beneficiary of the LC, you should be able to present documents which are complying one. Otherwise, if discrepancies are there in the document, then maybe your payment will get delayed. Maybe in that case, issuing bank need to approach the buyer, importer for waiver of the discrepancies. And if you have got a good relationship with the buyer, maybe buyer will accept the discrepancies if those are there. And once a buyer accepts or waive the discrepancies, issuing bank may also accept the waiver given by the buyer and issuing bank will make the payment. But the challenge is, in worst case scenario, if importer does not accept the discrepancies, then maybe we will not get the payment at all. But in practical sense, most of the time buyer will accept, importer will accept because ultimately buyer would require the goods, right? So LC is governed under Uniform Customs and Practices of Documentary Credit, UCPDC 600. So commonly known as UCP 600. So exporter will be assured that once shipment is done and documents as per LC terms and conditions are presented to the bank, his payment is assured by the issuing bank. So this is something seller or exporter would be very happy that he need not have to be dependent on the importer to get the payment. Even if there is no fund available in the importer's account, issuing bank will make the payment if documents as per LC terms and conditions have been submitted to them. Importer also gets the comfort that under LC that he has to pay for the goods only when goods are shipped and documents as per LC terms are received by his bank, that is issuing bank. So to that extent, importer would be happy. He need not have to pay under LC to the issuing bank. Okay. So obviously issuing bank need to sanction LC limit to the importer, and they will have the legal agreement and all those things between importer and issuing bank. But importer is assured that payment need to be made to the issuing bank only when goods have been shipped and documents as per LC terms and conditions have been received by his bank. So comfort to both the parties, right? Further, we need to understand the concept of LC. LC is not a contract between the buyer and seller. We need to understand this. So as an exporter, you will have the sales contract with the buyer, importer. Maybe in that contract, so many things you will agree. Quantity, quality, price, when to dispatch, what the documents you will be willing to submit, and how the delivery need to happen. All those things will be captured. And in that, LC will be the payment terms. So sales contract is between buyer and seller. And based of the sale contract, buyer will approach the bank for issuance of LC. Means so whatever terms and condition is mentioned in the sales contract, buyer will fill up the LC application form accordingly. Whatever amount, whatever price, whatever goods, when the shipment to take place, based on the sales contract, everything will be captured in the LC application form by the buyer. Buyer will apply for LC issuance. Once issuing bank receives the LC issuance request letter from the buyer, and if limit is there, issuing bank will issue the LC as per the request made by the buyer. Now we need to understand the concept. that once LC is issued, buyer, applicant of the LC is no longer a party to the LC. LC, though, gets the terms and condition from the sales contract, but once it is issued, it is independent from that sales contract. It has got nothing to do with the sales contract. For example, if in sales contract, it has been agreed by the exporter that I will give you 4 documents. 4 documents means maybe commercial invoice, maybe bill of lading, packing list, and inspection certificate. And while filling the LC application form, buyer forgets to mention inspection certificate as one of the stipulated document. Buyer mentions only commercial invoice, bill of lading, and packing list. Issuing bank issues the LC based on the buyer's request. So LC stipulates only 3 documents: commercial invoice, bill of lading, and packing list. Now seller, as a beneficiary of the LC, has received the LC where he finds that only 3 documents need to be presented to get the payment. Seller ships the goods and presents only 3 documents. And those documents are, let us assume that, complying one as per LC terms and condition. And those documents have been received by the issuing bank. Issuing bank examines the documents, finds the documents are complying. What issuing bank need to do now? Simply pay the beneficiary. And now these documents will be handed over to the applicant. Applicant, buyer, now has got the entire set of documents, which includes commercial invoice, bill of lading, and packing list. Now buyer realized that inspection certificate is not there. He goes to the bank and say that as per sales contract, exporter was supposed to give inspection certificate also. I have not received. Why did you make the payment? Please understand, bank will not listen to that. Bank will say, documents as per LC terms and condition has been received. Payment, we have made the payment based on that. Whatever has been agreed between you and seller, LC is not dependent on that. So we need to understand LC is independent. We call it autonomy of the LC, right? Next, we need to understand that LC is not a guarantee that the seller will definitely receive payment. So exporter is very happy that he has got the LC, export LC, and ships the goods, presents the documents, but does not get the payment smoothly. We need to understand issuing bank has given the undertaking under LC, which is a conditional undertaking, that if seller presents the documents as per LC terms and condition, then only payment will be made to the seller. This need to be understood by the exporter. LC is not a absolute guarantee to get the payment. LC is, you can say, yes, you can consider that it is a guarantee or undertaking given by the issuing bank if and only if exporter is able to present the documents according to the terms and condition of the LC. That we need to understand. Many of the time, we as an exporter, when we receive the LC, maybe we are very happy that we have received the LC, but we need to read each and every word of the LC to understand whether LC captures all the terms and conditions which is agreed in the sales contract or not. If you find any of the terms and conditions which you will not be able to comply, you should ask for the amendment before shipment of the goods. Because once goods have been shipped, after that, if you are not able to present the documents as per LC terms and condition, then payment will be an issue. Getting payment will be an issue because you need to be dependent on the importer's waiver of on the discrepancies. We need to understand one more concept, that LC is not a guarantee that the buyer will receive the goods that it has ordered. Buyer need to understand this very clearly, that once LC is issued, buyer is not a party to LC. If documents have been received by the issuing bank as per LC terms and conditions, issuing bank will simply honor it. Now, with those documents, buyer take the possession of the goods. Now, buyer finds that goods are not as per the quality or maybe not as per the quantity. Buyer cannot go back to the bank and say that stop the payment. Stop the payment because goods are not as per the contracted goods, or quality or quantity is not as per expected. Inferior quality, less quantity I have received. Bank will simply say, banks deal with the documents, not with the goods. If buyer has any issue related to goods, it will not be considered under LC. If any dispute is there, then buyer may go based on the sales contract, not as per the LC. So these are the basic thing we need to understand while we accept LC as one of the payment mechanism. So although it is a bank that will usually issue LC, any company or individual may also act in the capacity of the issuer. So please understand the concept that we think that only bank can issue LC subject to UCP 600. But UCP 600 does not prohibit other to issue the LC. That means what? Non-banking entity also can issue LC, which is subject to UCP 600. So you have received the LC. You are happy that LC have been received, but you are not checking who is the actual issuer of the LC, whether that issuer is a bank or not. Please understand, any corporate or individual also may issue LC. Non-banking entity also may issue LC. And in our country, also in India, these type of things have started. Need to be careful. If it is a bank, then also you need to see which bank, which country, where the bank is located, whether what is the credit standing of that bank who has issued the LC, where that issuing bank is located, whether there is a country risk or not. Those things also need to be taken care by the exporter. And here is the case. The entity who has issued the LC is not a bank. So you need to be more careful in this case. Okay. So beneficiary is advised to seek the advice of its bankers on the suitability of the issuer of a LC, because there may be various risks that required consideration, like availability of foreign exchange, political risk, credit worthiness of the issuer, etc., that may impact any payment due to the beneficiary. Now, briefly we have covered. So let us understand the flow of the LC. Okay. So here is the importer, here is the exporter. What they will do, they will have the sales contract. And in that sales contract, LC will be the payment terms. If that is the case, what importer will do? Importer will approach his bank for issuance of LC. Let us assume one bank I have named here, Bank of Baroda, for example. Okay. Bank of Baroda has sanctioned limit to importer. So if request has been received, LC issuance request letter, Bank of Baroda will scrutinize the LC application form, and if it is in order and limit is also there, then what this Bank of Baroda issuing bank will do, will issue the LC. Usually in case of export import, importer and exporter will be based in different countries. So usually this issuing bank will be based on the country of the importer. Fine. So how this issuing bank, which is located in different country, will be able to advise the LC to the exporter? Maybe there could be role of advising bank. Advising bank usually will be based in the exporter's country. So LC will be transmitted by the issuing bank to the advising bank, and advising bank will advise the LC to the exporter. Exporter will become beneficiary of the LC. Now, exporter has received the LC. First thing exporter need to do is read each and every word of the LC to ensure that he should be able to present documents as per LC terms and condition or not. If he finds LC terms and condition is okay, then he may accept the LC. If any of the terms and condition of the LC is he will not be able to fulfill, it is advisable to ask amendment in the LC before shipment of the goods, right? So exporter will ship the goods and carrier will give bill of lading to the exporter. Exporter will prepare all the other documents as per LC terms and condition, like commercial invoice, maybe packing list, maybe weight list, maybe other certificates would be there, stipulated document, and exporter will present the documents to nominated bank. This nominated bank, maybe the exporter's bank, may not be, depend on the LC. And a nominated bank, once finds the documents, nominated bank may pay, may not pay. So it will be the totally sole discretionary of the nominated bank as per the LC terms and condition, and their own call whether they are willing to do the negotiation or not, right? So if they decide to make the payment upfront, if LC is available by negotiation, then payment will be made to the exporter. The condition is exporter has to present the documents as per LC terms and condition. And documents will be forwarded. In this example, we have considered that nominated bank has negotiated the document and payment has already been made to the exporter, and documents will be forwarded to the issuing bank. Issuing bank receives the documents. Issuing banks again will examine the document. If documents are as per LC terms and condition, simply they will reimburse this nominated bank. In case this nominated bank has not made the payment now, then he will make the payment, right? So depend on the nominated bank, how nominated bank decides. And ultimately, documents will be given to the importer, and importer's account will be debited by the issuing bank, and importer has now received the bill of lading, original bill of lading. With that, importer will be able to get the goods released from the carrier. So this is very simple transaction. Quickly, we can see the different role of different parties involved in that. Maybe exporter, you are the exporter, and you feel that the country where that issuing bank is located has got some challenge, some issues, financial challenge. Maybe that central bank of that particular country has put the restriction that no outward remittance can happen. Or maybe you find that the bank who has issued the LC has not got credit worthiness, means you are doubtful. You are not very comfortable with the issuing bank. You are not very comfortable with the country where that issuing bank is located. In that case, you may ask that LC to be confirmed. Who will do the confirmation? Confirmation will be done usually by the bank located in the exporter's country only. If that is done, if confirmation has been added, that means beneficiary need not have to be dependent on the issuing bank. Now, documents need to be presented to the confirming bank, and confirming bank gives its own irrevocable undertaking to honor or negotiate a compliant presentation. So basically, if it is a case of confirmed LC, you as an exporter has got two undertaking. First, obviously, from the issuing bank. Second, confirming bank. And confirming bank undertaking to honor or negotiate is in addition to what issuing bank has already given to the exporter, right? So this is the concept of the thing. It is possible that in LC, there could be scenario that it would be mentioned, but it is not related to the exporter, that claim this bank can claim the amount from a third bank. So reimbursing bank may also be involved. That is quite possible. Okay. So applicant will be the buyer or importer. Usually it should be a customer of the bank. And obviously bank will do KYC and IEC verification, and all those things would be there in place. Due diligence part, importability of the item, licensing required as per FEMA in case it is a import from India to India, then these all rules will be applicable according to the RBI guidelines. Foreign trade policy only goods can be imported, and LC limit need to be there. And in case that importer does not have any LC limit, then maybe bank can put cash collateral in the by way of fixed deposit, 110 or 125%, depend on the bank policy. And opinion report on supplier means opinion report on the seller. Many of the bank will stipulate that let us go for that. It could be one of the terms and condition. LC application request letter applicant need to give to the issuing bank for issuance of LC. And once that is received, then issuing bank issue the LC. In LC, under LC, give irrevocable undertaking for payment to beneficiary against complying presentation. That is what we have understood about the LC. One more concept, that banks deal only with the documents, not with the goods. This also need to be understood. And in fact, issuing bank need to guide applicant these all things, so that applicant or buyer would be aware what are the things bank will do, what are the things bank will not do under LC. And it is expected that the issuing bank to guide importer in seeking proper documents to safeguard their interest. And in LC, there to avoid ambiguity about who should be the issuer of the document. So simply it is mentioned packing list. What does it mean? Who should issue packing list? Whether it should be a beneficiary or whom? Or inspection certificate. Actually, who should be the issuer of inspection certificate? Those things need to be guided by the issuing bank to the importer. And once documents are received by the issuing bank, what they will do, they will examine the documents, whether documents are according to LC terms and condition or not. And they have got time frame, maximum 5 banking days after they have received the documents. Within that time, they need to do that. And in case documents are discrepant, they need to give notice of refusal within that time. Okay. And if discrepancies are there, issuing bank will approach importer that whether you are willing to waive the discrepancies. If waiver is given by the importer, maybe issuing bank will also agree to accept the waiver given by the applicant, and accordingly they can make the payment, right? But in case documents are exactly as per LC terms and condition, they will honor, means they will make the payment as per the LC terms to the seller. If discrepant documents, need to give notice of refusal, right? So briefly I have covered, and this is the advising bank who has advised the LC to the exporter. What is the role of advising bank? Two things advising bank is responsible for. First thing is basically they are responsible for apparent authenticity of the LC. They themselves have satisfied about the apparent authenticity of the LC. That is the responsibility of the advising bank. And they are responsible that whatever LC has been advised exactly reflects the exact terms and condition of the LC. No word is omitted or deleted. Whatever has been received by the advising bank, entire text of the LC has been advised to the beneficiary. That's all. Now, if that LC has been confirmed, then there will be role of confirming bank. Documents will be presented to the confirming bank. So confirming bank adds confirmation to an LC and gives definite undertaking, which is in addition to that of the issuing bank to honor or negotiate a complying presentation. So you can say that when confirming bank has aided the confirmation, now that LC has become a confirmed LC. You as an exporter has already mitigated the default risk of the issuing bank, default risk of the issuing bank's country also, because you have got confirming bank's undertaking, which is irrevocable, that if you as a beneficiary of the LC presents the documents to the confirming bank, they will make the payment. You need not have to worry about the issuing bank. So if you observe, if you feel that you are not comfortable with the credit standing of the issuing bank, or maybe you find some risk on the issuing bank's country, then you can go for the confirmation of LC. But please remember, when you try to get the confirm LC, maybe that confirming bank charges who has to bear, you need to decide. In this case, confirming bank, when they add the confirmation, usually they will take a call on the issuing bank. So every bank will have to take a call on the other bank. So if LC has been issued by any of the bank located in Dhaka, so if you say to any of the Indian bank here in India that add the confirmation, because challenges have come up there and maybe you feel that tomorrow uncertainty is there, right? So in that case, bank also need to decide whether they should add the confirmation or not, because ultimately when you present the documents to the confirming bank in India, they have to pay you if documents are complying, and they will expect the payment from the issuing bank. So they need to assess the risk. So every bank need to take a call on the issuing bank. They will have the credit exposure and the issuing bank's country also. Now, confirming bank reserves right not to add confirmation to any amendment. So initial LC was, for example, 50,000. Now you and importer both have decided that let us do more business under the same LC. Now that LC has been enhanced from 50,000 to 80,000. Amendment has been received by you. Confirming bank also has received the amendment. Now LC amount has been increased from 50,000 to 80,000. Maybe now confirming bank is not comfortable to aid the confirmation on the additional 30,000. So they may say, not necessary, they may say that my original confirmation remain up to 50,000. For 30,000 amendment, we are not adding the confirmation. That means that LC will be advised to you unconfirmed LC. So that could be another situation, right? We need to understand these type of things are there. And when documents are presented to confirming bank, they also have got the same amount of time like issuing bank, maximum 5 banking days after the date of receipt to examine the document, whether documents are complying or not. And if documents are complying, they must honor, they do not have any choice. They cannot refuse the payment if documents are as per LC terms and condition. And in case of discrepancies, they may give notice of refusal to the presenter that these are the discrepancies, right? And you need to decide now what to do. Now, nominated bank. Nominated bank means negotiating bank. Maybe this bank is your bank. That is possible as per LC. Depend on the LC terms, whether LC is available with your bank or maybe available with any bank, right? So they may honor or negotiate, they may not honor a compliant presentation. Totally sole discretion of that bank, right? Depend on your relationship, depend on the issuing bank, depend on the how the nominated bank will be able to get reimbursement from the issuing bank. Lot many things would be there. They would decide. They may honor, they may not honor. And if they decide to act on its nomination, means documents have been presented to them, they may have to do the examination of documents and the same time frame is given to them. And if discrepancies are there, they need to give notice of refusal to the presenter. And they may guide, because maybe this bank is your bank, so you have presented a document. So they may guide you that, okay, fine, this invoice need to have correction, or maybe packing list is required some correction. So they may advise you to rectify the discrepancy. That is quite possible, depend on the bank's policy, right? So basically, here you are the exporter. What is your role in the LC? You have received the LC. I would say only one role you have got if you really want to get the payment under LC. That is, you must make compliant presentation to get the payment under LC. That is exporter's role. And it is only exporter as a beneficiary of the LC is responsible for making a complying presentation. Means documents as per LC terms and condition, documents as per UCP various articles, and documents according to internationally standard banking practice. So these are the broad thing, broad party which are related to LCs and their role. So let us understand further in this case, what is the benefit for the beneficiary. So it mitigates the default risk of the importer. So as a beneficiary or seller or exporter, you need not have to worry whether importer will make the payment or not. We don't have to worry about that because importer is not a party to LC. LC has been issued by the importer's bank. So importer's bank is responsible to make the payment. Only thing, we need to submit documents according to the LC terms and condition. It eliminates issuing bank's risk and country risk via confirmation. So if you think that there is a challenge or some issue with the issuing bank or country risk is there, you may ask for the confirmation. So this confirmation can be aided by a bank which is located locally, maybe in India. Any bank you can be the confirming bank, any nationalized bank, any private bank, wherever you want, you are banking, you can request that bank that whether you will be able to add the confirmation or not. So they will check, they will try to understand the transaction completely, and they will check that what is the line available on the issuing banks, or what is the country risk or country exposure taken by their bank, and accordingly they may add the confirmation. That way you will be able to eliminate the risk of issuing bank, and you will be able to eliminate the risk of issuing bank's country risk also. Bank finance. This is also good thing for the exporter. You have received the LC. So few of the banks would consider that, okay, fine, you have got the export packing credit limit. Then you submit them that, okay, fine, I have received the LC. They may give you pre-shipment packing credit against that if limit is already there, and that can be availed in rupees in the form of PPC. Maybe you can avail in foreign currency also in the form of packing credit, yeah, PCFC, right? Packing credit in foreign currency. That is the pre-shipment part. Once you have done the shipment, maybe you can go to the bank and say that I have done the shipment. These are the documents you need to take care now. Give me the funding. Maybe that bank will be willing to fund you against the documents under LC. But most of the bank usually what they will do in India, they will forward the documents without doing anything. I mean, without giving you the amount. They will discount, they will give you the money only when they receive the acceptance message from the issuing bank. In case it is a case of Usance LC, site LC, so payment will be made by the issuing bank. So there will be no need to fund the beneficiary. But in case you have already agreed in the LC that, okay, applicant need to make the payment after 90 days from the bill of lading, then in that case, maybe you will get the payment from the issuing bank on due date after 90 days. So in between time, you want the payment, then your bank may discount that. So it could be a case of bank finance also. Reach out to new customers. So when you are there in the market, you try to increase your sales, you will explore many countries, lot of efforts you will do to get the business. Not easy. Lot of things need to be done. So basically, maybe when you have got the buyer, then definitely you would try to pitch your product and try to protect your capital also. That, okay, fine. But maybe you are not aware about the customer who is new to you. You do not know the credit standing of the importer, first time dealing. So advance payment is not agreed by the buyer. Then maybe this LC can help you in that. So in that case, you need not have to worry about the what is the financial health of the buyer. If you are able to get LC, then you can trust on the issuing bank's standing, and accordingly you can approach the new customers also in this case. And what is the benefit for the importer buyer? So here, access to the seller as a source of supply without having to pay cash in advance, or even if importer's credit standing is weak or not established. So first time when somebody is importing, then definitely seller would not like to ship the goods, then buyer need to make the advance payment, very risky. But with the LC, maybe seller will be able to ship the goods against LC. So even if importer's credit standing, financial health is not good or weak, or seller is not aware about the financial health of the importer, despite that seller will be willing to do the business based under LC. So that is the benefit for the importer. It permits the importer, if it takes the appropriate steps to protect itself from paying against defective condition of the goods. Maybe bank says that, okay, fine, we do not deal with the goods, we deal only with the documents. But in LC, buyer can stipulate like pre-shipment inspection. So maybe to that extent, some outside agency need to inspect the goods before it is being shipped. So to that extent can mitigate the risk of, you can say, quality of the goods. LC gives assurance that need to make the payment only when goods have been shipped and documents have been received by the importer's bank. That is the comfort importer always get when importer deals under LC. And payment is affected only against documents, so the importer holds the money for a longer period of time. So this is another benefit. Immediately cash outflow will not be there as far as importer is concerned. Maybe under LC, it has been agreed that payment need to be made after 90 days from bill of lading. It is between seller and buyer, obviously. And seller has agreed as a beneficiary of the LC. Then maybe that cushion period will be available to the importer. Importer will be able to get the goods released. Then payment need to be made on due date to the issuing bank. It helps in reducing fund-based working capital requirement for importers. So if advance payment need to be made, if CC limit is there, then they need to use that OD or CC limit to make the payment. So immediately that rate of interest will start. But in case of LC, maybe LC issuing charge will be there, but their account will not be debited. So to that extent, some amount of, you can say, saving would be there for the importer. Now coming to the important thing, what is the risk for the exporter? When we say LC, what is the risk for the exporter? So critical risk is basically failure to comply the terms and condition of the LC. Already we have discussed that LC is an irrevocable undertaking given by the issuing bank to honor a compliant presentation. That means what? As an exporter, we need to ensure that we should be able to present documents as per LC terms and condition. What if there is discrepancies in the document? Then our payment may get delayed. Maybe you need to approach applicant to accept the waiver and all those things. Or in worst case scenario, there is a risk that documents have been returned back by the issuing bank. Now, that will be worst case scenario. We have not received the goods, we have not received the payment. We have got the entire set of document which our bank had or we had forwarded. Now it has come back. And goods are lying where? Goods are lying at the importer's country. What to do? So that risk is there. Failure to comply with the terms and condition of the LC is the critical risk. And I can tell you, almost 60 to 70% of time, when you present the documents to the bank, it will not be a complying one. Some discrepancies would be there. So always it is advisable for the exporter to read each and every word of the LC and ensure that you should be able to prepare document as per LC terms and conditions. This is very important if you really want to get the payment under LC. Otherwise, our payment will be delayed. Failure or delay in settlement from the issuing bank, that is another risk. So beneficiary bears the risk of failure of the issuing bank. So you have not checked what is the credit standing in the international market of that particular issuing bank. That bank had issued the LC, you had received the LC, you have shipped the goods. Now documents have been forwarded by your bank to the issuing bank, but in between that issuing bank has become insolvent. What to do now? That is the risk. Or maybe that bank is okay, but that country where that bank is located has got some challenge, political, economic, foreign exchange, and there is a restriction, no amount can be remitted outside that country, then despite willingness of that issuing bank, no remittance can be made to your bank or to you, then your payment is stuck. That risk beneficiary carries under LC. So to mitigate this simple thing, you can ask for the confirmation of the LC. LC issued by an entity other than a bank. We have discussed that. Yes, most of the time it will be bank who will issue the LC. But please understand, whenever you receive the LC, just see who is the actual issuer of the LC. It should be the bank. Then you can decide whether that what is the credit standing of that bank, where that bank is located, and all those things. But what if that entity who has issued the LC is not a bank? Then you need to be more careful. If a beneficiary has any doubt as to the status of the issuer of the LC, or if it is clearly issued by a non-banking institution, the beneficiary should exercise caution before shipment of goods and placing reliance on the LC as guarantee of payment, right? Foreign exchange loss, it is very simple. You had received the LC at that time, rupee was basically, as an exporter, rupee was basically, it was 83.50. When you receive the payment under LC at that time, rupee became strong and adversely moved. So it became 83.10. So that 40 paisa gap will hit you, foreign exchange loss. And fraud is one of the risks, you can say, beneficiary or exporter, you as an exporter, that is the risk you also exporter carries. There is a risk that the LC itself may be fraudulently issued. That is a challenge. This might induce a beneficiary to ship goods against an apparent bank undertaking to pay that does not in fact exist. That is a challenge. In this event, beneficiary will have no enforceable claim against the named bank because either that bank did not issue the LC or the bank does not exist. So what will happen that you will come to know this after you have done the shipment, you have presented the documents to the bank. Then only you will realize that this has happened. So that risk is there. How many of you basically get the LC verified from your bank before you do the shipment? I doubt. So you have received the LC advised by the advising bank, and maybe you are happy and you will do the shipment. Your department will, dispatch department will do the dispatch, and accounts department will prepare all the documents, and whoever is handling with the bank will take the documents to the bank and presents. But this risk we need to mitigate, fraud risk. Okay. So what are the risks for the importer? Non-delivery of goods as described in the presented documents under LC. So this is the risk. Bank will always say that banks deal with the document. Means goods may not be delivered because of fraud by the beneficiary. In such circumstances, the applicant may still remain liable to reimburse the issuing bank when documents presented to issuing bank is complying one. Short shipment or shipment of inferior goods, yes, that is the risk. Quantity mentioned in the document is basically, it is 100 metric ton. Received goods is 90 metric ton, or quality is inferior. That type of risk could be there for the applicant buyer. Buyer cannot say to the bank that I have not received the documents, goods as per the document. Banks deal only with the documents, not with the goods. Another risk, goods received by the applicant prior to documents being received by the issuing bank. This is another challenge. Maybe that distance from one country to another country, that sea journey is very short. So goods will arrive within 7 days, 10 days time, or maybe 15 days time. But maybe seller, exporter has taken time to present the documents to the bank because latest shipment date was given, 21 days are allowed under LC. Because exporter need to prepare other documents also apart from bill of lading, and documents have been presented to the nominated bank. They may take 5 banking days, we have discussed. They have taken that, then it will be dispatched. Then issuing bank again can take 5 banking days. Okay, so goods have arrived and importer has been intimated by the port authority or CHF agent or customs department, take delivery of the goods. Otherwise, you need to pay demurrage charges. What to do now? Documents have not been received by the issuing bank. So that risk is there for the applicant. Maybe applicant need to request the bank, issuing bank, that since we have not received the original documents under LC, then you issue the shipping guarantee in favor of carrier. So based on the shipping guarantee, carrier may release the goods. So for that, applicant need to give counter indemnity to the bank, where they need to accept that you are authorized to debit our account as and when documents are received by you, and we will accept all the discrepancies. So that type of risk importer will carry in that case. Loss or damage to the goods in transit, that is applicable in all the type of payment that need to be borne by the applicant. Foreign exchange risk, yes, at the time of issuance of LC for importer, dollar was 83.50, while the payment is happening under LC. At that time, it adversely moved. Dollar became 83.80, 30 paisa, 40 paisa increase, like that. Need to pay more in local currency. Failure of the issuing bank, very rare case, but it may happen that maybe LC has been issued against 100% fixed deposit, and payment has been given to the issuing bank, but in between, when payment was supposed to be made by the issuing bank becomes insolvent. Seller will say, I have not got the payment, you made me the payment. So in that case, what to do? If a buyer need to do the business again and again with the seller, maybe buyer need to make the payment out of LC also to the seller. So that risk could be there. And obviously fraud in the presented documents. So buyer also faces the risk that whatever documents they have received is forged one, not issued by the person who has signed. So these are the risks related to LC. So precaution, as an exporter, what we are supposed to do, check the terms and conditions of the LC in detail. In case any of the terms and conditions of LC you find difficult to comply with, ask for amendment before shipment of goods. This is very important. Read each and every word. Understand what are the documents you need to submit to get the payment. If you are okay, then go ahead, do this. Not okay, ask for the amendment. Boss, I do not want this clause. You find that one of the documents need to be, you can say notarized or something need to be done. It will take time. So you can say that, please waive the requirement of such requirement, right? Verify that LC is genuine. This could be a risk that the LC may be fraudulently issued. The beneficiary may ship the goods against an apparent LC undertaking to pay that does not in fact exist. Fraud, fake LC. And these things are real thing, right? Check the credit worthiness of the issuing bank. How will you come to know what is the credit standing of the issuing bank? Better to ask your bank. What is the credit standing of issuing bank? Your bank will be able to tell you the exact situation. Check the country risk of the issuing bank. There could be political, economic issues like the country concern lacks adequate foreign exchange reserve sanction. So neighboring country, a lot of challenges they are facing. So basically you need to be aware. Maybe like that, no challenge is there, but you will not be able to know whether economic situation is good or not. Maybe better you ask your bank, they will be able to guide you. Check who is the actual issuer of the LC. Already discussed that. Non-banking entity also can issue LC. So you should not rely on such LCs. Always be careful. Your banker would be able to guide you this also. By taking these precautions before the shipment of goods under LC, exporter can mitigate various risks and ensure to LC. And we will discuss the third payment terms, that is documentary collection. So if as an exporter, you are...
Isak sir, yeah. Can we take some of the questions, because I think LC...
Yeah, sure. Sure.
Yeah, because I think there are different payment terms and our participants will get confused. So it's better to cover questions accordingly.
Yeah. So no issue. What is the question?
So there is a question from Mr. Alok Chaturvedi that you have already advised with regard to the gray areas in the in obtaining LC from the exporter. Is there something else, Mr. Alok, you want to raise? You can raise hand and then we can.
So I have
Uh,
to take. So one slide I had shown. There I had mentioned what are the things you can do to mitigate the risk, right?
right. Fine.
Yeah.
So if there any.
I can see the question right now. Okay. Does LC also acts as an authenticity certificate to the importer that seller is genuine? No. That need to be taken care by the issuing bank or the buyer themselves. Better to, before you go for the LC issuance, most of the bank, especially nationalized bank, they will put a condition that if that seller is new, they will ask for the credit opinion report from outside agency like DNB, Dun and Bradstreet, or maybe bank can ask their bank, seller's bank, to give the credit opinion report. So maybe your bank can ask that. You can also approach DNB to get the credit opinion on the beneficiary. They will charge you, but it is worth to take one time credit opinion report. There they will mention each and everything. What is the when that company is established, what is the credit standing? They will give you the balance sheet detail also like that. Okay.
Right.
Does the bank provide some sort of credit ranking of the buyer, seller, as per their history with the bank? Frankly speaking, you are the exporter, right? So you have got the LC. So your bank will be your, nominated bank. So they will simply comply with the LC terms and condition, because once LC is issued, buyer is not a party. So what they will do, they will take a call on the issuing bank. So they will be able to tell you about the bank, not the importer. If you are a seller, if you are an exporter, right? And yes, if they have got the track record of the buyer, maybe of the record, they can share that this buyer is not okay. Few of the banks will go ahead and tell you that is quite possible, because ultimately their role is to educate or protect the rights of their own customer. And as an exporter, we are the customer of our bank, right? So they may say that, okay, fine, there is a history of late payment from that particular bank or from that particular importer, especially neighboring country, Bangladesh. A lot of challenges are there. So basically, in the past also, maybe there would be, it has been observed that payment is received with delay. Okay, so many of the time, bank will be able to guide you, but not necessarily depend on the bank's own policy and how they want to maintain a relationship with its own client, right? Any more question? I'll be happy to
Yes.
answer before I
Yes,
go
sir.
forward.
Yes, sir. I am having some of the questions.
Yeah,
So
please.
what is the time taken by the bank to issue the LC once the exporter is applied for it?
It should be immediately.
It should be immediately, like within a week or
Same day, same day, same day.
same day.
Why it should be delayed? If limit is there and LC application form is in order, same day.
Right, sir. Sir, this does LC is preferable in those countries where exporter is sending goods to a country which is shorter in distance. So in that case, this does LC as the mode of payment is preferred?
Hello?
Sir, am I audible?
Yeah, now audible.
Yeah, sir, I was asking that whether LC is a preferable mode of payment in those countries where, like, if the exporter is sending to a country which is where distance is short, if the exporter is sending to a short neighboring countries or countries like Sri Lanka, so in that case, LC is preferable as a mode of payment?
Yeah, why not? So
Okay.
only thing we need to understand the concept that what type of transport document we are asking under LC. For example, if it is Sri Lanka, so if bill of lading which has been issued in negotiable form has been stipulated under LC, then what will happen that applicant need to have original bill of lading with them to get the goods delivered against that. So carrier would release the goods only when original bill of lading, at least one original bill of lading is surrendered to them, right? So instead of that, maybe we can ask for non-negotiable CVA bill, right? So there, it will not be issued in negotiable form. In that case, applicant need not have to wait for the original non-negotiable bill to be received by his bank. So goods are straight consigned to applicant, means carrier when receive the goods will simply intimate the applicant take delivery of goods. So applicant need to prove that he is ABC as per non-negotiable CA bill where the goods are consigned. So that is quite possible.
Fine, because in one of the slides you were mentioning that the countries where distance is short, documents does not reach bank and the ships arrived to the destination country. So in that case, it becomes riskier to the exporters. So that is why I asked this question.
No, riskier for the importer in the sense that, for example, India. Okay, so we are the importer, for example. So goods have already arrived in Mumbai port, and your CHF agent says that take the delivery of the goods, otherwise demurrage will start. So how will you take the delivery from the carrier? Because your bank, importer bank, has not received the original bill of lading because somewhere it is stuck and within the time frame it has not been reached because goods have already reached. So the risk is we need to pay demurrage charges because we have not been able to remove the goods from the port, right?
Right.
So that is the risk. So to mitigate that risk, maybe we can stipulate non-negotiable CVA bill where there is no need for presentation of original bill of lading to the carrier to get the goods released, right?
Right.
So
Right.
that is possible.
Fine. Sir, what are the requirements from the importer side with regard to the quality of goods? As you mentioned that LC does not cover the quality of goods, it only covers the documents, whether they are in order or not. So what are the requirements from the importer side? Because you mentioned about the pre-shipment inspection. So, and all those, the compliances which you have mentioned with regard to UCP 600 and other things, does it cover anything with regard to the quality of goods, or because there must be a condition arising from the importer side with regard to the quality of goods?
Yeah, so importer can mitigate that risk by stipulating document like, you know that, okay, fine. So you are the importer based in India. Okay, so you can ask if goods are coming from any of the Singapore, okay, or China. You are importing from China. So you are not very sure about the quality. Then what you can do, basically, you can stipulate in the LC that goods to be inspected before shipment by XYZ Limited, an outside agency, right? So that certificate will be part of the LC that beneficiary need to present to get the payment. So at least to that extent that reputed external agency will go and inspect and give the certificate. And you can also stipulate what should be the content of that inspection certificate. What is your requirement? What type of standard you want in that particular goods? For example, chemical, maybe you can ask lot many things. So basically that can be stipulated that inspection certificate to certify X, A, B, C, D. So accordingly, that inspection agency will go inspect and they will give the certificate. So to that extent, you are aware that goods have been inspected by some outside agency certifying these are the specification, and when you will receive more or less the same specification goods you will receive, right? To that extent you can mitigate the risk.
Right, sir. Sir, last only a little bit clarification with regard to this location of nominating bank. You mentioned that it is in the exporter's land. And what would be the location of advising bank? It should also be in the exporter's land with regard to
Yeah,
the.
so basically advising bank is the bank who does advise the LC. Simple. Okay, so usually advising bank will be based in the country of, so for example, we are the exporter here. So maybe advising bank could be nationalized bank, private banks, depend on the correspondent banking relationship with the issuing bank. So for example, issuing bank will have some correspondent banking relationship with any bank in India. So they will advise the LC. Maybe it is a nationalized bank, SBI, Bank of Baroda, whoever, or maybe ICICI Bank, HDFC Bank. So that bank will receive the LC from the issuing bank, and they will take the printout, they will put their forwarding letter, and it will be usually received by courier to the beneficiary. So that is the role of advising bank. They say that, okay, fine, You can say that their role is basically that LC is genuine. In layman language, you can use that. And whatever LC has been received, entire LC has been advised to you. That is one part. But negotiation, when I say nominated bank, means in LC mentioned LC available with which bank. So maybe that bank could be your bank. Maybe that bank could be any bank in India. So depend, it is a restricted LC or unrestricted LC. So if it is mentioned, for example, it is mentioned LC available with State Bank of India Mumbai branch. That means what? As an exporter, you need to present the documents to State Bank of India Mumbai, right? If it is LC is restricted one.
Right.
But in case it is mentioned LC available with any bank in India, that means you have the flexibility now. You have the option wherever you want. Whoever bank is willing to handle the transaction, you can present the documents to anywhere in India, at Kolkata, Delhi, and with any bank. Maybe your bank can also act. Maybe you are banking with HDFC Bank. So you can go to the HDFC Bank. Your bank is HDFC Bank. You can say that this LC is available with any bank. Will you be able to handle the transaction? If they say yes, go ahead. So that is LC available with, that will be mentioned in the LC, means that bank is authorized to handle such transaction. In layman language, that is what I would say, right? Advising bank and nominated bank could be the same bank. That is also possible. It could be different bank. It could be the same bank also.
Okay.
Nominated bank is the bank where documents will be presented by the beneficiary. That is the nutshell.
Okay. Right, sir. Sir, there is a question from Mr. Dibyanshu also, that can we verify whether the inspection certificate is fake or genuine?
Banks assumes no liability on that.
Right.
Bank will simply say that whatever documents have been received is as per LC terms and condition or not. In fact, bank is not liable to, I mean, a bank, you cannot say that these are the fake and all those things. Bank is not going to verify the genuineness of the documents. That is also clearly mentioned. Okay, so that is not there.
Okay.
So very difficult, yeah.
Okay, and sir, Mr. Prabjot is asking with regard to how can we check which countries are risky under LC?
So better, I would request that proposal that you ask your bank, right? So you want to start a business with any of the African countries, right? So you are not aware. You are happy that buyer is there. You want to export. Why? Simply you take the name of that country and ask your bank what is the risk you see in that. If I do the export, whether you will accept the LC issued by that particular country's bank or not. Simple. So they will tell you, they will have the risk parameter. Every bank will have.
Okay. Sir, another question from Dibyanshu says that what if there is a delay in delivery of goods? Will LC cover it?
See, delay in delivery of goods means bank assumes responsibility up to the document only. Fine. So if goods are delayed, then nothing happen. I mean, bank will not come into the picture because bank will say that we do not deal with the goods, right? So if documents have been received, documents are as per the LC terms and conditions, they will make the payment. Simple. And as an importer, you have received the documents, you need to wait when actually goods will be received. Okay.
Sir, Mr. Arun is asking with regard to the bank charges. How much are the bank charges for one transaction?
Depend on the bank. Okay, so depend on the bank, and usually all the banks will display their charges in their portal. Okay, so if you are a newcomer and only one transaction you need to do with the bank, maybe they will quote you the card rate, whatever has been displayed, right? So charges could be different. I mean, depend on the bank. And if you are a regular customer of the bank, maybe you can negotiate charges because not many banks. Please understand this. When you go for discounting of the LC with any of the bank, not many bank would be willing to do such business. Many of the bank would not require, in fact, opening of the account also. For example, you are banking with bank A, and you think that bank A charge is higher, you can go to the bank B. What they can do, they will definitely do the due diligence and KYC and all those things with you on your company. But bank B can do the negotiation and they can remit the fund to the bank A. That is possible. Okay. So you can discuss that.
Right. Sir, this role of ECGC, when does it come? Once LC is issued or in the process of issuing LC?
See, again, this depend on the bank. What is the bank stipulation under the LC limit, right? So most of the, you can say, nationalized bank will put the condition that when you do export or import, especially this is for the export actually, okay?
Yes.
So you take the export related credit, then you need to have ICICI. But private bank will not insist on ICICI policy. But frankly speaking, if you want me to answer it, you should go for the ICICI because if you are not aware about the country risk, you are not aware about the buyer risk. So one of the best way you can do is go for ICICI policy because not always you will get LC as payment terms, right? So it is better to protect ourselves. You go to the ICICI because that wonderful organization is meant for that, to protect our capital. Yes, not full protection will be available. So if you are dealing under LC, then nationalized bank would say that you want to take the pre-shipment credit, then there has to be, or post-shipment credit, then there has to be ICICI policy, depend on the bank. They usually insist. Private bank has waived the requirement of the ICICI. So basically, ICICI has got nothing to do with the LC or non-LC transaction. It is related to export. Okay. So export, for export risk, they cover that. Okay. So that ICICI protection importer as well, no. ICICI is for export packing credit guarantee scheme, right? Export credit guarantee scheme. That is ICICI. It is meant for import only. Okay.
Fine, sir. We can. I think we are through with the question with regard to this LC. We can go to the further slides, sir. Over to you, sir.
Yeah. So now I took longer time in LC because that is what I thought that other things are very simple. Documentary collection could be the third type of payment terms. If you are not able to get LC as one of the payment terms, then what to do? You want to do the business, you want to do the export. And I mean, it is a case of negotiation, means you need to negotiate with the buyer. Buyer is not willing to give you the LC because LC has got its own cost. Buyer will say, I will make the payment, you ship the goods. That could be situation. And maybe that buyer is so strong, he may dominate, may not dominate, depend. So basically, documentary collection, you can go for the next best course of action as an exporter. So in documentary collection, exporter will ship the goods to the importer, but presents the documents, export documents to the bank. Means exporter's bank, who will be called as a remitting bank, with instruction to forward the documents to the importer's bank to deliver the documents to the importer against payment or against acceptance. So in case we say against payment, means it is a case of site bill, where you will say that documents should not be released unless payment has been made. In case of acceptance, means we are saying that, okay, fine, I will draw a draft bill of exchange, which need to be accepted by the buyer importer. And against that acceptance, you may release the entire set of documents. And I trust the buyer. Buyer will make the payment on the due date. That is what the meaning is. So the exporter's bank then forwards the documents to the importer's bank. As per instruction from the exporter's bank, importer's bank, when receive the document, presents the documents to the importer. And when payment is made by the importer, they remit the fund to the exporter's bank and ultimately exporter receives the payment. So nutshell, in this case, bank role will be handling the documents part. Bank is not giving any undertaking to the exporter, but bank is basically facilitating the transaction, means documents movement is routed through the bank. The role of the banks in documentary collection is limited. They do not verify the documents, they do not take risk, or they do not give any guarantee of payment. Bank just control the flow of the documents. as per the instruction of the exporter, right? While documentary collections, the bank does not cover credit and country risk. However, they are more convenient and more cost effective than LC and can be useful if the exporter and importer have a good relationship and if the importer is situated in a politically and economically stable market. So remember one thing, whenever you will ask for the LC, it is a cost to the importer. So importer would like to avoid that cost. LC issuing cost would be there, else documents handling cost will be there. So it is the importer would say that you just ship the goods, presents the documents to your bank. I will accept the document. I will give you the payment when documents are reaches to my bank. So to that extent, very low, less cost will be involved in documentary collection, right? So documentary collection is governed by another ICC publication. We call it Uniform Rules for Collection, URC 522. So I was telling that documentary collection can be of two types. First is DP, documents against payment, side bills. DP is good for the exporter as the documents of title to the goods will be given to the importer only when importer makes the payment. So exporter payment is much assured compared to DA basis. DA means usance you have given, payment is not going to happen, but on due date, maybe 90 days from bill of lading, 90 days from invoice as per your agreement in the sales contract. So in this case, when it is a case of DA, documents against acceptance, what you do as an exporter, you prepare bill of exchange draft, where you will mention the due date as per the sales contract. And that draft we need to be accepted by the importer. Once that is done, entire set of documents will be given to the importer by the importer's bank. Importers will be able to get the goods released based on the document, and importer will make the payment as per the due date. So DA is much riskier for the seller than DP, as the documents of title to the goods will be given to the importer after acceptance of usance draft drawn by the exporter on the importer. In this case, importer will take the possession of the goods after accepting the draft on it, and it will make the payment on due date. So if payment has been made, exporter will receive the payment on due date. But what if importer does not make the payment on due date? Now the challenge is exporter cannot demand the due amount from the presenting bank like in case of LC. Because in this transaction, bank has not given any undertaking. So this will be the call taken by the exporter whether they are comfortable on the credit standing of the importer or not. Okay. So for any reason, importer does not make the payment on due date, very difficult. So let us understand one transaction with the slide. Whatever we have discussed, simple transaction, seller is there, buyer is there, they will have the sales contract where it will be agreed that, okay, payment terms would be collection basis. So goods will be shipped by the seller and documents will be presented to the seller's bank. This is the remitting bank. An instruction will be given whether it is a case of DA basis or DP basis as per the sales contract. Documents will be forwarded by seller's bank to the buyer's bank. Buyer bank will present the documents to the buyer. If it is against the payment, then payment need to be made by the buyer before release of documents. If it is a case of acceptance, then buyer only need to accept the draft and buyer will make the payment. So when buyer will make the payment, that payment will be remitted by the importer's bank to the seller's bank, and ultimately seller will get the payment. That is very simple transaction. And for this, there is separate ICC publication. We have seen URR is there, right? So the question is, how is documentary collection different from an LC or open account basis? Unlike LC, in this case, bank does not assume any liability to pay if the buyer does not want or is unable to pay, because this is not the undertaking given by the bank. So it will be totally dependent on the buyer. If buyer makes the payment, importer's bank will simply remit the fund. If buyer does not make the payment, importer's bank will not do anything. So call has to be taken by the exporter whether he is comfortable with the standing of the buyer or not, importer or not. Compared to open account sales, we will discuss this. The documentary collections offers more security to the seller, but less than a letters of credit. Simple. LC is more secure than documentary collection. Now, when to use documentary collection? Quickly, we can see here. A lot of criteria can be applied in trade to determine which payment term would be good, but in general, a documentary collection would be appropriate where the seller and the buyer know each other to be reliable. Means they have got the track record. There is no doubt about buyer's willingness or ability to pay. You have done your due diligence. You have taken a DNB report and you have asked for the buyer's report, and you know from the market that the buyer credit standing is good. The political and economic conditions of the buyer's country are stable. So maybe if you are aware, fine, you can ask your bank, no issue. The importer's country does not have restrictive foreign exchange control. Few of the country will have this type of thing that, okay, beyond this amount cannot be remitted. Maybe they can put the condition that remittance can happen outside the country only against LC. Or they can put the condition that importer can remit the fund only for this type of commodity. That type of thing could be there. Means foreign exchange is they want to protect the foreign exchange. So they want to use the foreign exchange judiciously. So there could be so many restrictions could be there. Depend on the country. Now, what is the advantage? Quickly, we can see it is simple and inexpensive handling compared to LC. LC, we had seen each and every word you need to read it, complying with the LC terms and conditions, all those things. It is very simple. Whatever documents you will prepare, the same documents as per you only as an exporter, you can present to your bank and forward the documents to the importer's bank, right? You do not have to comply with any of the terms and condition of the LC because LC is not there, right? So to that extent, it is good and expenses are lesser than the LC. It often faster receipt of payment under DP than open account terms. So DP basis means documents have been received by the importer. Importer need to get the original bill of lading from the bank. What importer will do? Simply make the payment to get the documents released from the importer's bank. So it is faster than open account terms. Seller retains title of the goods until payment or acceptance is made. So original bill of lading will be with the bank, importer's bank. As per the terms and condition of our request letter, our bank will instruct the importer's bank that release the documents only against payment or maybe release the documents only against acceptance of draft. So to that extent, exporter retains the title of the goods. Now, what are the disadvantages? If the buyer refuses or is unable to pay the documents under DP basis, means documents against payment, the seller may need, because documents are still with the bank, because payment is not done by the buyer, importer. So seller may need to find another buyer because goods are already reached to the importer's country, not taken by the buyer. So need to find another buyer. Or if seller want that goods to be again call back to again India or then transportation related, pay for return transportation. In worst case scenario, if that is not cost effective, not getting the another buyer, then simply abandon the merchandise. That is the risk exporter carries in this case. This is the case of DP. What about the DA basis? If the buyer refuses or is unable to pay on due date for the documents under DA basis, documents against acceptance, exporter cannot claim the amount from the bank. We have understood this concept. Therefore, exporter need to ensure that the collection instruction should give specific instruction in the event of non-payment or non-acceptance. So on due date, accepted draft has not been paid by the buyer. So clearly it need to be mentioned in the forwarding letter when forwarding the documents to the importing bank that noting or protesting need to be done with the notary. Many of the country will have this requirement that on due date, buyer did not make the payment, so that you will have the legal recourse available to you. So in the absence of such specific instructions, the bank concerned with the collection have no obligation to have the documents protested for non-payment or non-acceptance. Any charges and or expenses incurred by bank in connection with such protest or legal process will be for the account of the party from whom the collection instruction was received. And who has given the collection instruction? Exporter. So whatever cost need to be incurred by importing bank to do all those things when payment has not been made by the buyer on due date need to be borne by exporter. Okay. Now the question is amount not paid on due date. What could be suggested action points? Suggested course of action for the importer when amount is not paid on due date by the buyer. Communication. That is the first thing we need to do. Initiate communication with the buyer to understand the reason for the non-payment. Why he is not making the payment. Understand, try to negotiate. Maybe that condition of the buyer has become some deteriorated. There is a cash flow mismatch is there. What is the intention of the buyer? Whether if you give some discount, buyer will be able to make the payment, or you can negotiate that, okay, I am giving you some time to make the payment. Communicate. That is the best thing you can do. Try to negotiate and find an amicable solution. It could be a temporary financial issue that can be resolved through communication. This is very important. You need to be in touch with the buyer. Negotiation of terms. Consider renegotiating the payment terms or extend the credit period based on the buyer's financial standing. This might involve modifying the payment terms or converting the transaction to a deferred payment method. So maybe it is DP basis and buyer is not able to make the payment. Documents are with the importer's bank only. Goods are there. What to do now? So always it is better to have a dialogue, communication with the importer to understand what is the real issue. Maybe prices related issue would be there at the time of sales contract. Maybe X price was there. Maybe that goods price have come down. Now buyer wants to negotiate. Maybe you need to understand as a seller. Legal action, not advisable, but you may go for that. If negotiation fails and the buyer continues to refuse or is unable to pay, the exporter may need to explore legal options, but it will be very costly affairs, right? So you need to decide. You may go for legal action also, but you need to decide whether it is worth, depend on the amount involved in the. Maybe you will be incurring lot many efforts, and maybe your counselor will take charges, which will be more than the entire recovery part. You need to decide and take a call. Okay. And disadvantage we are discussing. So ICICI we were discussing. So if the exporter has ICICI credit insurance, they should contact the insurance provider to understand the coverage and initiate a claim if necessary. Payment has not come, so you can, if you have taken the ICICI policy for export, you can make a demand to them, and according to the policy, they'll be able to give reimbursement to you, right? Dispute resolution is there. Consider alternative dispute resolution mechanisms such as arbitration or mediation. So maybe ICICI India is there. They can help you in this to resolve the issue without going through a lengthy and costly legal process. So these days, international disputes, basically all stakeholders are pushing for this type of mediation or arbitration rather than going for the legal. You approach the court, it will take its own time and not many issues would be there, right? Credit management. So this is what is advisable. Implement robust credit management practice to assess the credit worthiness of buyer before entering into transactions. This can help prevent such situation in the future. So always you need to have a understanding how much exposure you can take on any of the buyer, whether buyer is new one or buyer is regular. Even buyer is regular, how much one-time credit or export outstanding should be there on that particular buyer. So I have a case, one case that that customer was very good. I mean, and here exporter was based in India, and he used to continue supply, no issue. And suddenly one consignment payment did not come. Then he inquired. It was told that some issue has occurred. So he kept on supplying. Please send the goods. That way, 3 containers that exporter shipped, and all 3 containers, roughly around 40 to 45 lakhs per container value, got stuck. And it was a very tough time for that 1 crore and above was stuck. And because that risk mitigation you need to develop based on your risk appetite, that is important. So it is crucial for exporters to carefully review the terms of the DA agreement. Okay, so documents against acceptance. So these all were basically related to documentary collection. So what if you...
Sir, Isaac sir, there is
Yeah.
one question from Mr. Amit with regard to that he's asking, is it necessary to obtain original documents for importer to get the delivery of goods? Are there any exceptions?
Yeah, so I have told that in case of bill of lading, if it has been issued in negotiable form, means to order of the shipper, in that case, carrier will not release the goods without surrender of at least one original bill of lading. So usually bill of lading will be issued in 3 original. So at least one original you need to present to the carrier to get the goods released. That is in case bill of lading which has been issued in negotiable form. But I have told that if bill of lading has been issued in non-negotiable form, means it is a case of non-negotiable CWA bill. In that case, goods will be straight consigned to the importer. In that case, there is no requirement for submission of one original non-negotiable CWA bill to the carrier. Carrier will simply identify that you are the consignee, then goods will be delivered. Okay.
Fine. Fine. And another question in similar manner with regard to ECGC insurance in this documentary collection payment method.
Okay.
When
Yeah,
should
when,
it be taken?
yeah, when should the ECC
Insurance.
insurance be taken? After the sales contract or any specific stage? I would request, I would advise that whenever you are going for export sales, right? So it is advisable that you have identified that you are going to export with X. You are going to go export with X country, and party name is this. So at that time itself, you should approach ICICI. They will tell you whether they have got the credit insurance line available on that country or not. Because they also do the risk mitigation mechanism. They need to take a call on the country, okay, before they accept this type of insurance coverage. So they will be the right person. So why not at the beginning itself, you should approach the ICICI that whether you have got the line on Ghana or not, if you are going for that or like that country. I mean, any country, wherever you want, where you find, obviously US and European country, you do not have to worry about the country specific risk. But any African countries you want to do the export, better to approach the ECC upfront. They will give you the indication that yes, lines are available. Then what you can do once you have done the sales contract and you are about to ship the goods, at that time you can tell the ICICI guy that I'm going to ship this goods. What should be the premium I need to pay? So you give me the buyer-wise policy risk. So importing country, that importer-wise, country-wise, they will prepare proposal and they will give you the sanction letter and they will cover all the shipment according to that. So if they give you 2 crore limit, within 2 crore, you can ship whatever amount shipment you can do. Up to that amount, you will be covered like that. Okay. So,
Fine, sir. We can move to the next slide, please.
yeah, so it is last one is basically open account. You are the exporter, you have tried to get the advance payment, LC, documentary collection, but not possible. So maybe you can go for the open account. But please remember, open account, when usually both party will be agreed, because they have got a good track record. They know each other very well. And especially exporter has got tremendous trust on the buyer, importer. So it is very riskier for the exporter. And obviously importer, it is most safest. So in this case, what will happen? Exporter will dispatch the goods to importer and will send entire set of documents directly to the importer only, and would say, make the payment as per contract. So if contract says 1 month you ship, I will make the payment on first week of next month. So you will continue to ship. For example, it is August. So you will continue to ship in August. As per the contract, maybe importer will make the payment for all the contract in the month of September first week. It could be like that, or maybe it could be like that. As and when they receive the import or shipment wise, they will make the payment. That is could be. So terms and condition. In this case, shipment to be done by the exporter, and documents also need to be forwarded directly to the importer. There will be no role of bank as far as document is concerned. If goods are shipped by sea, the goods are consigned to the buyer, and the documents of title will be sent directly to the buyer. If goods are dispatched by air, the goods are consigned directly to the buyer. Means buyer will be able to get the goods released from the carrier in both the cases. A set date for payment is given, and the buyer remits the necessary funds to the seller as agreed. Whatever is the agreement. Open account. Okay. So open account arrangements therefore imply a considerable amount of trust being placed on the buyer by the seller. Once goods have been dispatched, a seller will lose all controls over payment and is totally reliant on the trustworthiness and creditworthiness of the buyer to make the payment. Open account trade is common in international trade, with an estimation of over 80% of world trade being concluded on open account basis. So most of the trade, international trade, will be done under open account basis. Why? It is particularly useful in transaction involving regular shipment, where the importer often makes payment at set intervals for goods received during a preceding period. Where necessary, sellers can seek to obtain credit insurance on their overseas debtors and can use an export invoice discounting or factoring facilities to accelerate cash flow. So depend. Okay. So these things are there related to open account. So quickly we can see here, most of the world trade are done on open account basis because it is fast and it is cheaper to other mode of payment. So as far as LC is concerned, as far as documentary collection is concerned, it is more cheaper than those. And therefore, most of the world trade is done under open account basis. Because of intense competition in export market, foreign buyers often praise exporters for open account terms, since the extension of credit by the exporter to the importer is more common abroad. Therefore, exporters who are reluctant to extend credit may lose a sale to their competitors. Exporters can offer competitive open account terms while substantially mitigate the risk of non-payment by obtaining export credit insurance from ICICI. So to mitigate the risk, you can take ICICI policy. So to that extent, you are safe. Okay. But definitely we need to understand what exactly policy ICICI policy covers. Okay. Bank's role in open account will be limited to handling the remittance. As and when buyer will say, make the remittance to the seller. That's all. Remittance handling only, right? So basically, if you want to see the chart, here is the seller, here is the buyer. Contract will be there. Contract, within contract, it will be agreed that it should be open account basis. Then what exporter will do? Exporter will ship the goods, and exporter will also forward entire set of documents to the buyer. Now buyer has received documents. Buyer has literally received the goods also, you can say. And as per the agreed terms, buyer will simply instruct its bank to make the payment. And once that is done, then ultimately seller will receive the payment. Simple transaction. Bank role will be only to take care of the remittance part. This bank will do the outward, and this bank will receive the fund. And this bank is the seller's bank, exporter's bank. So whatever we have discussed, it is not an exclusive basis. Okay. Understand this. It is not that you need to ask 100% advance. How it works? For example, export order is for 50,000. Maybe you can ask the 100% advance 50,000, absolutely fine. But it could be it could be combination of two payment terms also. Like you can ask advance payment 20%, 10,000. And you ask for 80% LC. That is quite possible. Or you can change the situation. You ask the advance payment 20% and 80% against documentary collection, DP basis, documents against payment. Or you can ask for advance payment 20%, go for the DA basis. That is quite possible. So combination is possible. So totally depend on you, right? So whatever we have discussed, one slide will tell you. So advance payment, when goods will be delivered, only after receipt of payment from the importer. When payment need to be made before shipment. What is the risk for the buyer? Very high risk. What is the risk for seller? Negligible risk, no risk, advance payment. LC, goods to be dispatched before getting the shipment, before getting the payment, because goods will be shipped, documents will be presented, then only payment will be received. When payment will be made? After shipment by the issuing bank. Relatively lower risk for both buyer and seller. Documentary collection, goods will be shipped before payment. Payment will be made after shipment, and it is low risk for the buyer, but moderate to high risk depend on DA or DP basis to the seller. Open account, before shipment dispatch need to be done. Payment need to be made only after shipment. Very less risk for the buyer, because in this case, mostly buyer will be able to receive the goods also, but very riskier for the seller. So gist I have covered. So if you have got any question, you can ask me. This is my contact number. So if you want to be in touch with me, you have got any trade related issue, whatever we have discussed, feel free to write me. And if you have any question, I'll be happy to answer all the question. Okay.
Thank you, ICICI sir, for such a detailed presentation given by you, sir. Participants, any questions from your side with regard to any of the payments? We have discussed LC in length. Apart from that, any other question, please use the option of raise hands, which comes under the reaction tab. So any questions, or you can simply write down over the chat box. I can read out the question for you and sir can answer accordingly.
Yeah.
A recording of the session, it may not be permitted by the management, but I'll have to check on this, but definitely presentation will be shared to all the participants. Thank you. Any other question? Kindly raise hand and ask accordingly. Sir, I think maybe the exporters, the participants, they don't have any questions, because most of the questions were pertaining to LC only, and they were covered during the session itself. So maybe we can wind up now if there are no questions from any of the participant.
Fine. So
Fine.
I hope the session was valuable. Okay, so still you have, if you are not able to ask right now, but you want me to ask question later on, then definitely, okay, need the slides as shown.
Yeah. I will share the presentation to all the participants along with the feedback form also. So you can go through the presentation, and after the presentation also, if you face any of the questions, we can certainly pass on all those queries to ICICI sir, and he will definitely answer. So
Yeah.
don't worry about the questions or addressal of your any of the issues. You can always write to us with regard to any of the issue on this payment terms, and also the future sessions that FIEO organizes with any of our speakers. So you're always welcome to write your queries and mail. I'll mention my email ID over the chat box. So that you can, or you all must be also having me and Arpan's email ID. It's manisha@fio.org, all small. Fine. So thank you everyone, and especially ICICI sir for coming over as a speaker and detailing the presentation on such an important topic, because most of the international trade is happening on, as you have spoken, on open account basis. But LC is also a preferred mode of payment because the risk on the buyer and the seller is low. So I was just going through the last slide, which we were detailing about. So it was a very interactive session. Thank you for coming over and detailing our exporter members and the participants with regard to the all those nitty-gritties involved in with regard to payments in international trade. Thank you, all of you. We will be sharing you the presentation to all the participants, and also welcome the feedback from your side with regard to the session. Also, with regard to the any of the topics related to export finance, we welcome the topics from your side so that we can design the sessions according to you, and so that we can further help you in all your avenues pertaining to the international trade, and because FIEO is acting as a facilitator between you and the exports, and FIEO is working tirelessly with a common goal in order to increase the exports from India. So that is what FIEO has to speak in the end. So thank you once again. It was a wonderful session. We look forward to have such sessions in future also. Thank you. Thank you, everyone.
Yeah, thanks to every participant for giving your valuable time. I hope that session was valuable. As already ma'am has said, Manisha has said, you have got any question, feel free to ask. And thank you FIEO for giving me the opportunity to conduct this program. Thank you so much to everyone.
Thank you, sir. Thank you so much.
Thank you, sir.